Hello traders, Gary Wagner here. It is 1:17 in Honolulu, 6:17 in New York on Friday. Happy Aloha Friday, as we say on the islands. First day of December 2023, and this is the Weekend Review. What a phenomenal ending for the week, as well as the first day of December, with gold futures basis the most active February contract gaining $35.60 and closing at $2,091.70, which when viewed through a monthly chart is the highest closing price on record, which can be clearly seen once we enlarge or blow up the last couple of years of this chart. Since the mid-70s, we can see that gold has had multiple tops or new record highs. The first one, labeled number 1, occurred back in 1980 when gold traded to approximately $845. The second top occurred in 2011, labeled 3, when gold traded to $1,916. And then we had this triple top with a record high in August of 2020, March of 2022, and of course the recent activity. However, these are intra-month highs, with the last of these three tops being a closing basis on a weekly, daily, and monthly chart. The question then becomes, how high could gold go? We put together a basic projection using a combination of Elliott wave theory as well as Fibonacci extensions. As you can see in terms of our Elliott wave count, it begins back in 1976 after Nixon put the final nail in the gold standard. It goes up to our first top here, the record top of 2011, right above 1900, and then these triple tops being our fifth wave. There are two basic models that you use to project a fifth wave. The first one is that waves 1 and waves 5 should be about equal. Another way to calculate that is to measure wave 3 and then do a 0.618 extension. That extension is anticipating that we could be very near the conclusion of a fifth wave, concluding a 50-year super cycle. What was most interesting as we were putting this chart together with our current projections, we were reminded of an article that my son and I submitted to Technical Analysis of Stocks and Commodities in 2016, simply labeled Gold's Super Cycle, and the chart that it included looked very similar to the chart that we created today. And the study that I am referring to included this chart with projections that we created in 2016 when gold was fixed at $1,500 per ounce. Using the same data and projecting a basic Elliott wave count, we came up with the conclusion that gold could find a top to this super cycle at approximately $2,063, very close to current pricing. If that is the case, we would expect a correction right around this area, and that would be followed by a repeat of the impulse cycles waves 1 through 5 if all the elements that were in place for the last 50 years remain in place for the next 50 years. What jumped out at us when we looked at these two studies side by side was that a study that was done in 2015 when gold was only at $1,500 came to the precise conclusion that we currently find ourselves, which is a top at this particular price point. It underscores why Elliott wave theory combined with Fibonacci theory can be so powerful and incredibly accurate. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.